All right, Matt, the mortgage guy. In today's video, I'm going to talk about the Fed meeting on September 21st, what the Fed said, what they did, how it affected mortgage rates, how that's going to affect the real estate market, things that you can do if you're in the market to buy a home, that and much, much more coming right now. All right, Matt, the mortgage guy, residential mortgage broker. I help people buy homes. I help people refinance homes, 1 to 4 units. Happy to help you if you'd like to get started. Greatmortgagebroker.com. If you want to connect with a great agent in your area, homeandmoney.com/Matt. In today's video, first I'm going to talk about the Fed meeting because I streamed it live, had a little bit of commentary during it, but really we were listening to Jerome Powell, listen to the press conference, listen to the Q&A. So I just let him speak. I think people wanted to hear that more than they wanted to hear me. Didn't listen to every single word, but I took some notes and I wanted to let folks know, just like we did when I was streaming live, we're watching it in real time, how that's affecting mortgage interest rates. First off, I want people to understand, and I repeat this a lot, but I think it bears repeating. The Fed funds rate, which is what they increased by 0.75% this week, that doesn't directly affect mortgage rates, mostly because this 0.75%, 75 basis point increase, we've all been expecting that. The market had that already priced in. So what did affect mortgage interest rates, and the funny thing is, it didn't affect them right away. It didn't affect them on Wednesday. It affected them on Thursday, was a couple different things. One, the Fed's dot plot, which kind of plots out what they plan to do in future meetings. Like right now, this is what we see. This is what we see as our course of action. They start dot plotting that out and they share that. And then, of course, Jerome Powell's comments, how he responded to Q&A, all that stuff has quite an effect on the market. And let me tell you, it is a nasty, nasty Thursday for mortgage rates. As I'm recording this video, it's September 22nd, the day after the Fed meeting. Mortgage-backed securities are down 83 basis points, probably translates to about 0.25% interest rate. So that 30-year average for a home buyer who's buying their primary residence nationwide of all lenders, of course we're lower as brokers, but that's another story, is probably in the 6.75 range now, high sixes. Imagine that, right? So I'm going to get into how that affects the real estate market, what that's going to do to buyer sentiment, and all those things. But first, just some of the notes from some of the commentary from Jerome Powell yesterday, right? He made it really, really clear. My main message has not changed since Jackson Hole when he talked there. And, you know, the FOMC is strongly resolved to bring down inflation to 2%. And we will keep at it until the job is done. And really, like, to put it in layman's terms, he touched on it multiple times that, you know, no matter what it does to the economy and to unemployment, like, they're resolved to get inflation down. And I think he's trying to let people know this, and I think he's used the word pain in the past. It's going to be painful. There's nothing else really that they have no choice, right? And so between these words of we might have to do more and do it for longer is what's affecting mortgage rates, not the 0.75 rate hike, right? The rate hike we already knew was coming. The talk about what we need to do, we're going to stay at it no matter what, no matter how high, no matter how long, we're going to bring inflation down. That is what is having that negative effect on interest rates today, along with that dot plot, right? Because the dot plot, you know, of individual members on that committee doesn't point to any rate cuts. There was even some rate cuts that we thought earlier in the year, like, okay, they're going to increase, but then second half of 2023, they might bring it back down. Like, it doesn't point to any rate cuts 2024 anymore. Powell and his colleagues have basically said that, like, it's unlikely rate cuts will happen next year. And so like the end of 22, all of 23, nothing but rate increases. That is something that for sure is affecting the market today. I'm watching it in real time. Like we're down 87 basis points. Talked about the housing market, which I think is interesting for me, all the clients that I work with, all my referral partners. He said it's probably in need of correction following record house price increases. And he used the word unsustainable. What does that mean? In my opinion, it means that like he understands this has an effect on housing. And I'm not here to like argue that. I'm actually slowly but surely changing my stance on what this is truly going to do to the housing market. I see demand and I see consumer sentiment crumbling, changing, affecting the housing market, even with short supply, even with not a lot of homes out there. I'm going to give you a stat. I'm going to show you some numbers. $500,000 purchase. Granted, homes aren't that expensive everywhere, but in California, that's a starter home in a lot of areas. First-time buyers. Average millennial makes 80 to 85,000, based on a study by the National Association of Realtors. First-time home buyer puts down an average of 7%. I use 5% because I work with a lot of people that put down 5%. Truth be told, the 7% is probably an average of some 3s, some 5s, some 10s, and some 20s. Of course it is, because there's different people put down different amounts. But 5%, let's use 5%. If somebody's got great credit, and rates aren't at 7% yet, but they're getting close, and they're buying a $500,000 house with 5% down, and they're financing $475,000. If, and some might argue when, rates get to 7%, between principal, interest, taxes, insurance, and mortgage insurance, their payment is roughly $38.75 a month. Now, I'm good at math because I do mortgage and I do mortgage planning daily. If somebody makes $80,000 to $85,000 a year, roughly $7,000 a month, they don't take all that home. Maybe they take home $5,500 of it. Taxes and insurance and other things get withdrawn from their check. That person, one, wouldn't even qualify because of debt to income ratio issues. But if they did, there is no way they should get themselves into a $3,875 mortgage. Let's look at $400,000. Maybe it's better. $400,000, 5% down, 7% interest rate. Again, not there yet, but we're on our way. $3,100 a month. That's still a big payment. That still affects willing and able. Some people may be able to buy at that high of interest rates, but will they be willing, right? A lot of people don't. And I know it firsthand because me and my team are talking to people day in and day out. So no doubt this is going to have an effect on home buyer demand. And regardless of how much inventory there is, with less inventory, it probably has less of an effect on pricing. But even with low inventory, I think that this monetary policy can crush demand enough where we see a 5 to 10% decline in housing prices in 2023. There, I said it. Home prices could come down. We've got 2 more Fed meetings this year. They've laid it out for the most part, right? That they plan to, that Fed funds rate, which was like 0 to 1/4 the beginning of the year, is all the way up to 3 to 3 1/4. It's a range. So it's up 300 basis points. They are talking about trying to get it to, 4.6, I think was the target. So they've got 3 more hikes in mind. November 2nd, they meet. December 14th, they meet. Both of those meetings, we're sure to see rate hikes. And then again, besides what we expect to see, whether that's 75-50, 75-25, 50-50, 50-25 in those 2 meetings, it will be important to see the dot plot. Depending on what's going on with the economy and how the Fed outlook is, does that dot plot change? Does it call for more? Does it call for less? And also the commentary, right? Jerome Powell, Q&A, and all that stuff. So it's going to be interesting. But as of right this second, real time, the day after the Fed meeting, interest rates not doing so hot. Where the heck did that window go? There it is. Down 75 basis points on the day. It's going to be about 0.25% on some lenders' rate sheets. So hopefully this was helpful. Again, greatmortgagebroker.com if you want to connect with me and my team, homeandmoney.com/Matt if you want to connect with an agent in your area to see if it's your time, to see if you can afford to buy. Hopefully this was helpful. Until next time, we gonna see.